Hey, good morning, everybody. Welcome to Thursday, the 6th of January 2022. Now, this is a supplemental video. I just thought, the markets had sold off from last night. We got the FOMC statement 7 p.m. With the minutes really, and it's indicative that the Fed are potentially going to hike in March this year. So that's three hikes we're looking at for this year. Rate hike for March. It's quite a hawkish statement last night. There was no presser from Jerome Powell at 7:30 as per usual, and then the Q&A. So at 7:30, he usually would read out the statement and then have Q&A. Now that was scheduled that he would not have that. It was just a statement. I think everyone was sleepwalking into this statement, not really expecting much. But needless to say, we have sold off quite a bit from from the highs we were putting in yesterday. Now looking across the market here, really you're seeing the biggest move. Actually, I'll get the Nasdaq up here. On the 60 minutes. Right, so you can see quite the sell-off really came in all day on the Nasdaq, but its counterparts, looking over at the Dow, for example, yesterday, we did come in and make that new all-time high on the Dow. We have been looking at this trade. I mean, pretty. There was a bit of a fight going on here after the open for quite a bit. Just in this, just in this area around here on the open, finally getting the bid up and into a new all-time high there. We slammed that one. And then we were off the desk, and what really came in there after coming into this FOMC minutes, you see at that 7 o'clock to 7 o'clock to the close, really we just sold off quite a bit here. On the minutes, and down we go. So, I was talking to Reed this morning, and really it's just so much value on the table here this morning. Just a lot of value here to be picked up for a lot of traders. Buying off at the lows. You've seen that there this morning for the early bird, 7 a.m. bid up in the Dow. Downside, I'll talk about this in the pre-US video a little bit later on, but quite a bit of value on the floor here. So SPOOs again, 7 a.m. up we go. I think it's destination 47.05 for the SPOOs before we start to range back down and hit 46.63s. Even the DAX, the Nasdaq bouncing now off of the 100 EMA. I tend to only trade DAX in the European mornings. We see lovely bid off of the 7 a.m. marker here. Targeting pivot 16,144 is DAX. Gold down to the 18,000. It did take a little bit of a bid, but it's not jumping as much as I would expect. Risk off product. But one of the bigger things to note here is the real yield rising. And if you're watching your Bloomberg this morning, you'll see that they're absolutely raving about the sheer breadth of the rise in the real yield here. Of course, moving inverse to the bonds, cheaper bonds, higher yield, right? So. Looking over on a daily chart for the T-note, you'll see here that we've sort of broken the low of the week of the 16th of March last year, which was a bit of a line in the sand of support. So now we're really heading down to test the support, the high of the 3rd of September 2019. That's 128.8 I think that's that's basically where we're headed here. But also to note that really we're in this sort of compression area here. So I think, whatever you want to say about 128s, 127s, I think destination is down here in the compression trend. And that is going to be actually quite the move for the bonds. Now, I don't think we're going to get that today or this week in one move, but that's going to be about 1.6% down on the bonds when all's said and done before we find decent buying. You could be looking to buy a little bit of incremental value scaling in at the 128, 8.5s. But just to give you an idea of what these moves are, the real yield is definitely set to appreciate. And when that happens, really tech gets absolutely slaughtered because people want to then get out of racy tech growth, right? And they want to get into safer, less volatile things like holding bonds, getting the yield, right? Cheaper bonds getting the yield. So, rather than risking your ass jockeying the Nasdaq and suffering massive P&L swings, you're going to go to the bond. You're going to get slow and steady, payments out of your bond for holding the bond. So that's why we have this relationship. Meanwhile, oil's been playing a blinder. Lovely day yesterday. We actually had a disappointment. We had the APIs Tuesday came out, drawdown 6 mil on expectation, drawdown 3. Came in yesterday. I think the read across was we only had a drawdown of 2 mil. So we had priced in, much higher prices before we got the actual DOE, right? So it was all said and done. 78.45's target achieved for us. We've been looking at this since Monday. And then, just come off overnight. FOMC minutes coming in just a half an hour before the pit close on oil. Gap down on the reopen of trades here to electronic session anyway. Just picking up a little bit of value here in what was Wednesday's Asia-Pac session. Yesterday's Asia-Pac session. So, just about there in the S1 today. I still think we can target 79.81s on oil. These SPR releases from the US and Biden administration, net, I think globally there was a concerted effort of 80 million barrels released from global strategic reserves from the US to Britain to China. So I just don't think it's enough now. I mean, there's also been a little bit of chatter this morning that really people aren't that interested, because when you buy from the SPR, you have to put it back as well. So you might get it cheap out of the SPR, but you then have to find and source those barrels at a later point to then put back into the reserve, right? Anyway, that's a moot point. I think we're going to get bid here from this whole area. And I think we can trade 79.81s pretty quickly. A potential rate hike rise in years gone by, in the 2013, 12, 13, 14, 15 environments, a lot of these US drillers were highly geared on their financing, which means they were highly financed on borrowed money, and a rise in the rates would deeply impact their P&L. And so they were always very cash hungry, liquidity hungry. But this time round, it's different. This time around, these drillers in the US have learned their lesson, and they are not highly leveraged on sort of lower cheap money. I think some of them might be, but they've learned the lessons of the previous cycle. And so it's not actually that much of a shocker to oil. If it is, well, if you're going to see some of these smaller drillers going out of business on the back of rate hikes, which we're not going to get for another 3 months, or potentially, that's actually bullish, because it's going to put them out of business at a point where the US really needs to be running close to its spare capacity, or dipping into spare capacity. As while people are talking about a surplus for 2022 or the first quarter of 2022, I just think that the market is quite anemic in terms of spare capacity on a global scale, and I'm bullish for that reason, to be honest. So anyway, just thought this would be a nice little opportunity to get in, look at some of the value that's out here in the market today. Everything has been severely sold off on those Fed minutes. I think we're going to spend most of the morning bouncing on equities, and I think oil's just come into a fantastic area for the buyers to load up again. Do be aware the dollar is going to be strong today, I think, and I think we're going to see new highs on the week on the Dixie as well. So, all right, listen, have a fantastic day. For the pro traders, I'll see you in the room in a few minutes. And please do click to subscribe and like on YouTube. It would be great to have you following. And otherwise, stay safe out there. Cheers.